Yo, good morning. Thank you guys so much for joining today. Today is going to be August 21st, 2024 live stream. And so yesterday, we took no trades yesterday because I was anticipating either it was going to be a consolidation or expansion, and we got consolidation. So after we consolidated basically the entire day, we generated some sell-side liquidity here. So New York PM session lows, and then we have a previous day low. Coming into today, we have yet to take out London lows, and Asia's lows. So we can anticipate for us to target these liquidity here coming into the morning. Based on the higher time frame, I can anticipate for prices to retrace back inside this daily fair value gap. Since we're overall bullish here on the daily time frame, I would anticipate for us to respect this daily fair value gap. This daily fair value gap here to continue higher, but for the moment being right now, I would treat this daily fair value gap as a draw of liquidity once we get some bearish price action. So once we get displacement to the downside, I would target previous day low, because previous day low is basically the daily fair value gap's high. And if we do trade to the daily fair value gap, I wouldn't consider any more shorts. I would wait to see if we can get a reaction to the daily fair value gap, or if we just trade right through it. If we trade right through it, then tomorrow I will consider trading shorts if we get some sort of price action like this. If we get this coming into tomorrow, that's when I would consider shorts. But that's only if we get a daily candle closure below this daily fair value gap. But as of right now, we are still in consolidation. So depending on how we open up here, in about 5 minutes will tell me if we take out previous day high or previous day low. But you do have to keep in mind that we don't really have any fair value gaps to the downside as well. So we don't have that much. We don't really have that much. How do I explain this? We don't have much strength to the downside. However, the only thing that I do note is that we have this SMT here between London highs and New York AM session highs here from yesterday, and we do have this overall higher time frame SMT between ES and NQ. So we have this SMT here, but I don't think it's gonna hold. Like the move, we're not bearish, if that makes sense. Like we don't have any bearish fair value gaps formed in this price leg down. I believe this is just we're consolidating to continue higher. Either, like I said, either we retrace into this daily fair value gap and continue higher, or we close on the weekly time frame with a bearish candle, and we retrace back inside the weekly fair value gap that we will most likely create. But that's just my anticipation for right now. Anything could happen. So like I said, for today though, I would short to target the fair value gap high after we retrace back into the daily fair value gap. That's when I would no longer take any shorts. And yeah, trading intraday models here. So yeah, I'll be right back. I'm gonna get some food. So Alright, we're about to open up in about 2 minutes. If you guys been with me for, for however long, you guys should know by now that I don't trade the first 30 minutes. I let that opening price range do its thing, and I like to wait till the 4-hour candle closes or the 10 o'clock open, because that tells me that a 4-hour just closed and a 8-hour candle just closed. So let's see what we did here overnight. Did we respect any consequent encroachment? How about the 6-hour? Not anything there. 10-hour. Not really. Okay, so let's just see what happens here. We do have this hourly FEG here that prices did create, so I'm gonna note that. So we traded into that daily this 1-hour FEG, and then we expanded higher. We took out this high. However, let's see if yes, or NQ took out this high. So this high here is there's actually SMT here. SMT with ES. So there's SMT there at the highs. So this high should hold if we're bearish, and we should get a candle closure below this hourly FEG. And what I mean by candle closure is I want to see a 1-hour candle closure below it, not just any candle. I want to see a 1-hour candle close below it. And yeah, just watch this first opening bell. Like, watch the SMTs between these three indices, between NQ, ES, and YM. There's always SMC at the start of the morning. Like, YM is shooting higher, NQ shooting lower. It's so weird. Let's see the RTH gap here. we just filled it in. So we opened, we filled it in. So let's see if we can use it as a resistance level now. And like I said, this hourly FEG should be respected if we're bullish. But if we don't respect this and close below it on the daily, sorry, not on the daily, but if we disrespect it and close below it on the hourly time frame, then I would like to see lower prices. If we look at here on the hourly time frame, just a big old consolidation. And here on the economic calendar, we only have news here at 2 FOMC meeting minutes. It's not actually FOMC, so just something to keep note of. Like I said, we still have about like 24 more minutes left of the opening bell or opening range, so just watch that. I don't care too much for I don't really care too much how we trade here in the first 30 minutes. It's just not my trading style. I don't trade that first 30 minutes, no matter how good the setup is. Is this a German flag? This dude's taking his sweet time. I mean, he has 10 minutes, but Let's just stay on the 1 hour time frame or 50-minute. Not too exciting. Dollar has actually been expanding lower here. Let's see. We took a previous day low. That was a draw. It looks like we're trading with up into a 10-hour FPG here now on the dollar. With the dollar trading lower here, we can actually start seeing lower prices on the indices, which is good. So that this daily fair value gap has been treated as a breakaway gap. Oh shoot, he moved. I could have moved this here. I had a lot of options here. This one. But if I go here, then that means I have to kick out this bishop. Wow, what a trade. Well, I mean, he moved his king, so now he can't castle anymore. So now I can just pour all my basically all my offense towards this side. Just boom, just you know. I got X-ray vision here. He takes, and then I take here. Very, very good decision. Very good decision. So there's no longer SMT here. This guy's strategy was quite strange. Like, he was playing so slow. Oh, this was a hanging piece actually. Oh my gosh, that was actually a hanging piece. Oh, not concentrated. Always concentrated. I just blundered. Alright, that's 20 push-ups. There's 20 push-ups for losing that game right there. He takes this, I take this. I think I can just go here. $10 minutes left to the closure here. So let's see what happens. I go here, he takes, I take, he takes, I think that's probably the best move. Is he? Yeah. I go here, he takes this for free. And I can't take back. So I think this is my, yeah, because now I have actually that's is that fine? His knight is still hanging here actually. Wait. Yeah, I needed to take that. Now his knight's still hanging. I'll just capsule. Probably get this for these guys. He brings out his pawn. Okay. Is he forced to take here? Okay, this pawn's hanging. Probably want to do this. Is that a blunder? We're even. Here. Here. He doesn't have to take. He doesn't have to take this. Now I have discovered. Oh, I cannot do that anymore. He has a lot of things there, so he can go here. I go here and then he goes here. I take here and he takes. So let's actually go. I actually want this open file for myself, so I'm actually go here. we're about to have a the 4-hour candle closure in about 4 minutes or so. So just be patient. Just be patient. Prevent this pawn from moving up here. Also in diagonal with my pawn. Wait, he can just, no, he can't go here because I'm still diagonal. So actually I'm gonna bring this back, or bring this back here. This thing's, oh wait, I think is this checkmate? Oh, that's... Oh, did I miscalculate? Here he takes. Then I go here, then he takes, and it's checkmate. Alright, that's 40 push-ups in total now. Alright. Sweet mama. Not very nice. So here on this next 4-hour candle, I can anticipate here for us to take out this 4-hour candle high. And if you guys take a look, it's also in a confluence with the 8-hour high as well. So depending on how we close here on this candle will tell me if we attack the high or not. But my idea is, will we have a fair value gap to enter off of? And it looks like we probably won't have any fair value gaps to enter off of, so I'm not going to take anything here. Yeah, not going to take anything here. Oof. 40 push-ups. Believe it or not, I actually did it. That was... what a chest pump. Wow. Wow. That's tiring. Well, we have about 5 seconds left. There's no FEGs here for me to enter off of, so it's just not worth it. What the? What was that spike? We didn't have news at 10, did we? Yeah, 10:30. Oh, interesting. Very interesting. Wow, my chest is actually pumped up right now. I can feel it. So I did want to go over some pros and cons here from last week. I know I did this yesterday's stream too, but it helps me out with keeping me on track. And yeah, let's see what happens. Because our previous day high seems to be like the draw. So we get a better bullish candle closure, then we'll see from there. But so far, no, there's not. ES and Q appear to be attacking previous day high. This SMT is still holding though, however, so we'll see. But yeah, like I said, I do want to go over some pros and cons with you guys, and I will go over some improvements I could make this week, my risk management plan, and 2 examples of an A+ setup. Wow, my chest is actually... Oof. Okay, so pros and cons here. There are 3 pros and 3 cons from last week. So the first pro here from last week is I was able to utilize all of my knowledge that I do have, and I was able to, combine all of that to formulate a trade model. So in this specific trade on August 14th, I was able to use the fair value gap theory, and I was able to formulate a reason why I was anticipating for prices not to retrace back into fair value gap. So basically, based on the fair value gap theory that I kind of not came up with, but how I anticipate breakaway gaps, I was able to use that in confluence with a trade model. And yeah, I was able to combine time frame alignment, power of 3, like I said, fair value gap theory, and standard deviations. Second one, by taking off contracts, when I was able to take off contracts, or I recognized, whenever we disrespect a consequent encroachment. Whenever I say disrespect, I mean like we get a closure above that consequent encroachment level on that specific fair value gaps time frame. So whenever I saw that, I was able to close off half of my positions to mitigate risk. And the very last pro is, like I said, using my knowledge, I was able to utilize the new day opening gap as an entry pattern. I don't use it specifically as an entry pattern, new day opening gap by itself, but if it's in confluence with a fair value gap, where like a new day opening gap overlaps a fair value gap, that gives me more confidence in the model holding. So those are some of the pros. Some of the cons here are, even though the model I took itself here on August 12th, the model itself was an A+ setup or an A tier setup, but I failed to recognize SMT, so I wasn't really paying attention to too closely to the SMT, and I was I just failed to recognize that, and then I got stopped out. That's it's not really something like drastic, but like I said, I should be able to recognize the SMT, and then I should make my decision based off of that as well. So do I want to lower my size whenever I'm taking a trade like that, or do I want to just avoid that trade in general? One of the mental improvements I could work on is one of the, I guess, not natural things to do here is instead of trying every way possible to yeah, so last week when taking trades, I was actively I wasn't actively paying attention to the trade itself. I would purposely try to ignore the outcome. Like I told myself I would be content with the outcome, but facing the outcome itself is a little bit different. Like facing the outcome what I mean by that is like you actually have to watch and see what happens. But in my case, I wasn't actually, I wasn't actively looking at the charts whenever I take a trade, and that's something that I have to improve on, because the way I trade, I need to be present. I need to be there managing the stop loss, managing my position size, and managing the take profits, right? So something I could work on is I need to actually be present at the trade and face the trade head on. And the third thing is keeping track of all my trades. I need to do that more. Some of the small trades that I do take, like just like very quick scalps, I fail to record them. So that's just something that I need to actually start doing, and I feel like that's gonna help me be more selective with my with the trades I take. Bye, Ma. All right, and some of the improvements here for next week is, so some improvements are paying more attention to SMC this week. So I've been doing that. I mean, yesterday I was able to formulate a trade idea, or not actually formulate a trade idea, avoid a trade idea because there was SMT between these highs. So this is an actual, this model right here, based on this 15-minute power of 3, I could anticipate for us to take out that 15-minute power of 3 high and London highs. But because ES had already taken out its high, I was, like I said, I decided it was best not to take the trade and just tape read it. So I was actually able to avoid taking a trade there yesterday because of SMT. Second thing is that I'm going to be more selective with the trade setups I take. I have a video on my YouTube channel that kind of goes over my entire trading model and what makes a model in A+ setup, so you guys can watch that. So being more selective. Third thing is I'm gonna use all the skills in my arsenal to formulate a trade model. I'm not gonna base a trade model just simply based off power of 3. I'm gonna use power of 3, time frame alignment, a fair value gap theory, and being in alignment with the higher time frame. And fourth thing is that this is more of a mental thing too that I could improve on. Is, like I said, whenever I am in a trade, I need to be more attentive and face that trade head on. I'm not going to cowardly just try to avoid it, or I'm gonna be a man. I'm gonna man up and face the outcome with confidence, conviction, and practicing contentfulness, if that's even a word. And yeah, so the only trade I've taken so far this week was based off this 15-minute fair value gap. We had a reaction to it. This placed higher. We had 6 hour highs here at the target, and we ended up taking it out. And yeah, that was the only I would say A+ setup. Risk management plan. So the risk management plan I have for today is I'm not going to de-risk myself or anything like that. I'm going to be trading normally. So let's just say if I were to take a trade right now, right? Excuse me. But if I were to take a trade right now, my very first trade, and let's just say the risk to reward is a 1-to-1, I will be risking $480 if the risk to reward is a 1-to-1. But if it's a 1 to 1.5 or higher risk to reward, then it will be $720. And let's just say I my first trade of the day was a winner. If I do perhaps take another trade that day and it's my second trade, then I'll be risking only half of what I made my first trade. So if I made 500 in my first trade, right? My second trade, I'll be only risking $250. But I have another situation where, let's just say I lose my first trade, right? Then my second trade, I will be risking $240 if the risk to reward is a 1-to-1. But if it's a 1 to 1.5 or higher risk to reward, then the stop loss would be $330 or $320. Excuse me. And third trade, same thing, same concept. You guys can take a look at the numbers yourself. If I win my second trade, I'll be risking half of those profits. And yeah, that's basically all I do have for the numbers parts of it. You guys can take a screenshot or whatnot. I don't really care too much. Some of the rules I do have in place is that I'm not going to be taking any models that is below a 1-to-1 risk to reward ratio. My risk to reward ratio should be set to where I take my first partial. I'm not going to have my TP, my full take profit at the terminus. I do take partial, so my risk to reward is set at my very first partial. And whenever I do take my first partial, I'm going to be taking off half of the position size, and I'm going to move my stops to break even. So let's just say, for example, I have an original position size of 20 contracts, right? And then my prices hits my first take profit. So I'll take off 10 at the first take profit, and then I'm going to move my stops to break even. And the next TP off of that, I'll take off another half, and then another half, and then another half, if my terminus gets hit. And yeah, that's going to wrap it up for the risk management portion of this live stream. Last and not least, I will show you guys 2 examples of an A+ setup personally. So I can actually go over the trade I took on Monday. So on Monday, I took an A+ setup, or I would give it an A+ setup, just according to my model and what I look for in a trade setup. So going into Monday, excuse me, I was already planning on trading intraday models. The reason is because we have already taken out daily objective and weekly objective on Sunday. So we took out previous week's high and previous day high here already before Monday even started. So we took it out during Sunday's after evening session. Notice how we still had Asia's highs intact as long as London lows, as well as London lows. So we had Asia's highs still intact here, and we still had London lows still intact. So prices are either going to attack, those session-based liquidities, and we failed to take out London lows here, and we started displacing, or we started pricing higher. We created a 15-minute fair value gap with the move higher, and I don't take my entry based off of the retracement into the 15-minute fair value gap to target Asia's highs. I do want to see how prices reacts to the 15-minute fair value gap before I take any entries, right? So here we come into this 15-minute fair value gap, and then we just kind of started consolidating. Once we get a bullish power of 3 candle here, so based on this candle right here, this 15-minute candle, I was able to anticipate for that high to be taken. And notice we created this bullish power of 3 based on retracing into this 15-minute fair value gap. So there's a reason for us to there's a reason for that bullish power of 3 to be created. So I'm pretty sure I went out to the lower time frames here now to find an entry pattern to attack that 15-minute high. So on the 3-minute time frame, there was a 3-minute fair value gap indicating that there's strength in the markets, and I took an entry whenever prices retraces back inside this 3-minute fair value gap to target the 15-minute highs alongside the Asia's highs and this New York AM session highs. So on the 1-minute chart, it's a little bit clearer, but whenever prices retraces back inside the 3-minute FVG, I take my entry, I take partials off at the 15-minute high, and then I take off another partial at the New York AM session highs, and then Asia's highs was my full TP. So yeah, that's an A+ setup. Like I said, there's a reason why we created that bullish power of 3, and within that 15-minute power of 3, there were displacement candles where I took my entry off of whenever we retraced back into it, and the objective was still intact. And yeah, that's my first example of an A+ setup. So let me actually put this trade here onto the A+ setup slideshows. So duplicate this slide. I'm going to show you guys another example of an A+ setup here. So paste at, copy, paste, copy, paste, and then copy. Wait, what the heck? Paste. Alright, so for the very next example, I'm going to be choosing this one. I just randomly chose that one. So this one here on the hourly time frame, we can see that we are bullish here on the hourly time frame. We have 8-hour BISIs, 6-hour BISIs, we have a 4-hour BISI. So here I'm already noting out, okay, we're pretty bullish on here on the higher time frame. But whenever we retraced into this 4-hour fair value gap, we didn't have much of a strong reaction away from the 4-hour fair value gap. So I go on to the 15-minute time frame and see what happens on here. So we have this 15-minute fair value gap here and 30-minute fair value gap. So this 30-minute fair value gap is kind of small, but it's right here. And my model here, I believe, was a short. And notice how on the higher time frame we're bullish, but on the lower time frames I'm able to take a lower time frame short model, because I understand that I'm trading the internal model, so I'm not going to be shooting for, you know, previous week's low or whatnot. So it's the same concept as the previous trade, where we retraced into a 15-minute fair value gap and we had a bearish reaction to it. And notice how the 15-minute is aligned with the 30-minute and 1 hour. So those respective lows, we have time frame alignment between those 3 time frames. And I also know the reason why we created a bearish power of 3. The reason being is we retraced into a bearish PD array. So on the 3-minute time frame, again, we have a displacement, we have a fair value gap on the 3-minute time frame, and I was able to take the entry at the 3-minute fair value gap and target the 15-minute, the 30-minute, and the 1 hour low. On the 1 minute, it's a little bit clear here, but we retrace into the 3-minute fair value gap. I take my entry and I'm targeting the 15-minute, 30-minute, and 1 hour low. I set up standard deviations to see how low prices could go, and yeah, we take out the 15-minute, 30-minute, and 1 hour low. I move my stops to break even, and then I just let the trade run. So there's that. 2 examples of an A+ setup. Some of the things that you can take away is that my A+ setups, I always want to know why we created that, you know, bearish or bullish power of 3. If we retrace into a 15-minute fair value gap and we get a 15-minute bullish power of 3 closure, right, that just gives me a lot more confidence and conviction to actually take that model. Another, you know, aspect of an A+ setup is time frame alignment. there should be time frame alignment between at least 2 time frames. And yeah, so that's gonna be all for essentially that's gonna be all for the concepts that I do want to go over on stream. Let's take a look at what's actually occurring here on the markets. So it appears that we retraced back inside this 30-minute fair value gap again. So this 30-minute fair value gap here, we retraced back into it, and then it looks like we are creating a bullish 15-minute candle closure here. Well, I mean, we still have 8 minutes left, so we'll see what happens in 8 minutes. But if we can get a bullish candle closure and previous day high and New York AM session high is still intact, I would like to take this trade. Just it depends on how we close in about 8 minutes. So I'll give it some time, and yeah, I'll see what happens there. But hopefully, you know, me going over those examples of the A+ setups, and going over my improvements, pros and cons and whatnot, I was able to help you guys understand the concepts a little bit easier. And all right, let's see if there's anybody on the live actually. Oh. 7 minutes and 40 seconds left till the 15-minute candle closure. Oh, yo, what's up, Damon? Oh, what's up, Neo? I wasn't actually, I didn't have the live chat up, so I wasn't able to see your message till now. But what's up, man? So what's up? It's dope to see that people are, that you guys are actually tuning in and watching the stream. Oh shoot, I forgot to note out the 10 o'clock open. Oops, that's what happens when you're lost in the sauce. Alright, let's note out the 10 o'clock opening price here. There's the 10 o'clock opening price. So if you were to take any long models here, it would be you want to long below the opening. Here's midnight opening price. We still have 5 minutes left to the closure, so anything could happen in this 5 minutes. We'll just see. We'll see. I'll play another chess game, but this time I do 10 push-ups because my chest is actually kind of sore from doing that 40. Actually castle here now. We have this pawn here. Actually, I'm gonna cancel here right now, so I can actually be safe. And I bring out. Okay. I can take with this queen. He takes, and then I go here. He takes, I take. Nice, and now I go here. Taking that bishop. I actually do want to prevent this horse from going here. That would be no good if he is able to get his horse there. Once he gets his horse here, then I'm kind of... Oh. Change of tactics, eh? So I have this here. Okay. I'm gonna go here now. Attack that bishop. What is he planning with that move? So he's attacking here, here. I go here, he takes, I take. I go here, he takes, I take. He takes, I take. I'm threatening this now. Threatening that. I mean, my pawn structure is a little bit off, but me having my queen out is actually kind of strong, so I can go here. And I can go here now. He takes, I take. Or I go here, he takes. I go here, he takes, I take. I go here, he takes, I take, he takes, I take. My rook, I move my rook here. I think I move my rook here first and then I go here. Oh wait, I think I actually win that exchange. He takes, I take, he takes here, and I go here. That's winning for me. If he goes, I think that's winning for me. Unless he goes here, then that's gonna be different. Yeah, that's winning for me. He's smart, very smart guy. I'm trying that again. We go here, here, here. Now I have this queen under attack. I go here, he takes, I take. He takes, I take. $15-minute candle closure, very not that strong closure, so he doesn't actually have to take. I can just go here. He takes here, take there. He takes, I take. He takes, I take. I'm up a pawn, but it's very, very interesting price action today. Okay, so I go here, he takes, I take, he takes, I take, he takes, I take. I can go if he doesn't move anything, he can go here actually. And then it's kind of forces, it kind of prevents me from moving this pawn up. But if he takes, then I can just take. And then I've got him in check, so he's forced to take, then I can take here. And then just exchange here. Yeah. Now this is the free pawn, because now I prevent him from going here. I take this, and then I take this eventually. Well, I take here, he's probably going to move here. And that's... okay. Now I go here, probably he's going to move... he's probably going to think like, okay, I go here, I can't actually go there, I'm going to go here, he takes, I take, I go here, he takes, I take, I go here, he goes here, I go here, he goes here, I leave it, he takes, I take. Okay. He goes here, then I just go, he goes here, I go here. Goes here, I go here. Well, he still can't do anything. He shouldn't. I think I can escape check without. Right, yeah. Because he can't go here. Yeah, I'm chilling. I am chilling like a villain. So now I prevent him from going here. Alright. I actually just don't want him. He can just check me again and then check here again and I go here. I don't want to. Oh. Okay. I don't want to overlap my things here. Actually, just move towards my pieces. So yeah, move towards my pieces. Yep. He goes here. Okay, nice. And then now I'm gonna go here and then here. Tagging that. Ayya. Uncle Roger say, ayya. He's lost. Ayya. Okay. Wow, look at that. NQ just took out previous day high and New York AM session high. So there's no more SMT there. Very interesting. So we tapped into a 30-minute fair value gap and then we expanded higher. Resignation. I wonder. Let's do a game review. I want to see if I played this game. Way to go, you took advantage. Yeah, this move here is actually kind of crazy because then I won't be. This move here, what was this move here for? I kicked this guy out. Unless he wants to do a trade. So that's his move. So my move should have been here. He takes this, so we trade. After that, he goes here. That's when, actually I'm losing tempo now. So if he goes there, my queen's here. I go, what do I do? Yeah, I think that sequence is just winning for him, but that knight going there is actually kind of. I could have. Could have gone there. He can't really do anything against that, so I just take. He takes. I take, and then. Yeah, I think. I moved this piece here up because I wanted to, in hopes of getting this up. Oh, instead of going here, I go here, forcing this exchange. Huh. Interesting. So, okay, we leave that daily fair value gap intact. Alright, it looks like we're expanding towards July's 23rd type day. So let's see. This 15-minute fair value gap, like I said, is created because we retraced back inside a 30-minute fair value gap. And let's see if we actually tap the consequent encroachment. We tapped consequent encroachment of this 15-minute fair value gap. So if I were to take this 15-minute model here, it wouldn't be that bad. Okay, we have sell side to target here. We have this liquidity. That's liquidity that we could target. Buy side liquidity. Top. So if I were to take something here, right, it would be to target that high. Alright, so we close in about 2 minutes. So let's see. Okay, we can actually enter off of this PG here. I don't see us retracing all the way back into there. So I'll take this entry like that. We still have about a minute left to this 3-minute candle closure, so, or this 15-minute candle closure. Not 3 minutes, sorry. A minute left. Depending on if we get a retracement back inside this 3-minute fair value gap, we'll see. Expanding higher here. So that, yeah, that fits that 5-minute fair value gap here. This 5-minute fair value gap is going to be treated, or I would treat that as a 5-minute breakaway gap. So that should be a breakaway gap. $570. So I'll take that model here actually. Contracts. I'm actually put this swing low here because that's the 3-minute. Yeah, that's the 3-minute FVG, and that becomes okay. Not too bad. 579. Should take 9 contracts here. targeting that buy side level if we can get a retracement back inside this 3-minute fair value gap. And I'm treating this 5-minute breakaway gap. So this 5-minute shouldn't be retraced back into because I'm treating it as a breakaway gap. And if we take out this 15-minute swing high, then I wouldn't take anything here. I would actually just close. If we take out this 15-minute swing high without giving me an entry, I'll close the charts for today. And yeah, that would be my model. That's gonna be my model for today. And yeah, this buy side level is from further back. All right, let's see if we take out this 15-minute swing high. If we take out, like I said, if we take out this 15-minute swing high, then I wouldn't consider anything here anymore. Oops. Right there. 1-to-1 is here. So I'll take off 5 at the 1-to-1, and then I'll take off 2. So we'll see. All right, so I got entered here. I'm actually record this. Start recording. And yeah, I'm just basically targeting that 15-minute high in this buy side level here. That's all I'm targeting. But if we get stopped out, we get stopped out. And if we get, you know, if we get our take profits get taken, then we take it. As simple as that. And this is based off of, like I said, I'm treating this 5-minute fair value gap as a breakaway gap. I don't want to see prices retrace back into it, but if we do, then yeah, then we actually got a candle closure below the consequent encroachment of that 3-minute fair value gap. Okay, so there's a stop out. There's one stop out for today. I think I would have taken this model, I think, every single time, to be honest, but I can't tell if there's SMT between the highs from here. Okay. So let's reassess now. Let's see what we do from here. So like I said, that was I would give this a pretty solid setup, because I'm treating that 5-minute fair value gap as a breakaway gap. I wanted to see us take out this 5-minute high here before we take out before we retrace back inside this 5-minute fair value gap. And since we got a retracement back inside this 5-minute fair value gap, that doesn't show me that we're strong. And yeah, let's just let's just watch price action now. But overall, I felt like I was practicing pretty well. I was, you know, able to voice out what I was feeling in that trade and whatnot. There was an SMT here between the highs too, so these highs didn't get taken. The 15-minute highs on ES didn't get taken on YM as well, so I would only give this model one more chance if we can close above that 3-minute fair value gap, but it appears that we probably won't, and it looks like we're expanding lower now, so we'll see. So we took out previous day high, and if we have this bearish 1-hour candle closure, then I would anticipate for us to get a reversal to maybe take out previous day low as well. So we'll see. we have 10 minutes left, so I'll wait till then, and then if we don't get a model set up, then I won't take the model. But yeah, let me take a look at something here. Okay, so that's one loss. I feel like I would have taken that every single time, to be honest, because like I said, there was a lot of confluences that we had a reason why we created that 15-minute power of 3. We came off of a 15-minute consequent encroachment of a fair value gap, of a 15-minute fair value gap, and we were still holding that 15-minute fair value gap here. This 15-minute fair value gap was still holding, and we respected the consequent encroachment. So yeah, I feel like I would have taken that every single time. Taking out previous day high here. We take out previous day high, and then we're starting to revert back inside this range. So if we look at it based off of accumulation, manipulation, distribution, that was probably the distribution phase. But like I said, at that specific time, who would have thought, who would have known? But because I was anticipating for us to take out this high too, buy side level, but we didn't. So now we are starting to displace lower, and I would only consider shorts until we once we take out previous day low. I wouldn't trade any more short models. But yeah, for right now, London lows appears to be the draw now after we take out previous day high. So if we can get a model that aligns with the draw here, then I'll take it. But if we can't, then I just don't take it then. So let's see. See if we can create a another model here where there's time frame alignment. I love between the 15-minute, the 30, and the 1 hour. About 6 minutes and 30 seconds left. Oh, I need a stretch. So this would be considered a market structure shift here. Market structure shift. Whoops. Market structure shift, and then we treat that 5-minute breakaway gap now as an inversion level. Here we'll see. Once we close here on the 5-minute time frame, we will most likely treat that as an inversion. We don't actually have to come back into it. It's just the fact that we close below it gives us a lot of insight. So these relative equal lows here now become draw liquidity, accumulation, manipulation up, take out previous day high, and now distribution back down. But let's see if we can get a model to target that. Like I said, I wait for candle closures. So if we take out previous day low without giving me a model, or yeah, if there's not a model that presents itself, then I'm not going to take it. 5 minutes left. So we did close below that 5-minute fair value gap, 5-minute busy. So once we close below it, that should be now treated as a inversion level, like I said. And I feel like we probably will take out London lows here before prices gives us an entry. So, well, let's just see. Let's not be too hasteful. 3 minutes left, so let's see if we can get a retracement back inside the 5-minute fair value gap if we create one. Gotta practice, you know, contentfulness. Very all right. Deep breathing, deep breathing. I don't want to see prices retrace back inside the consequent encroachment of that 5-minute fair value gap, but you know, based on the hourly, the 30-minute, and the 15-minute, it appears that we will probably take out the low. I'm anticipating for us to take out the low. It's not a guaranteed, but it's just, like I said, it's just what I'm anticipating. There's actually a new day opening gap here. So if I were to take a model, it will be like this. We retrace into the 5-minute fair value gap, target London lows, have my stop loss right here. So it'll be a 1 to 1.3. We'll see if we can create a 15-minute or a 5-minute fair value gap or not. But we are about to close in about a minute, so I'm gonna get another re-entry. So first take was a long. Second take will be a short to target London lows. Full terminus is going to be previous day lows and New York PM session lows. So let's just set up the contract sizing here. What's half of 576? 288. 288. 576 here. What's 570? We're about to close in 22 seconds. I'm taking my entry at the new day opening gap. There's time frame alignment between the 30 and the 1 hour. The higher time frame draw, or you know, that draw is going to be London lows, and previous day low will be my draw too. So stops will be moved to break even once we take out that 15-minute. So there's my entry now. If we can get a retracement back inside that new day opening gap that aligns with the 5-minute fair value gap, then I'll take my entry. And yeah, that's gonna be it. My stop loss is basically a complete, if we get a complete rebalance of the 5-minute fair value gap, I'll get that's my stop out. But I'm not anticipating a complete rebalance though, so let's mark out the 11 o'clock open. So you want to sell above an open, sell above the open, buy below the open, and I'm selling above in this case. Here, higher time frame narrative here is we take out previous day high. We started to displace lower here, shown on the 5-minute time frame. We have displacement candles, and what I'm basically trying to enter off of here is a retracement back inside that 5-minute fair value gap. But if we don't get an entry here, then I will probably just close the stream. I mean. if we take out that 15-minute low without giving me an entry, then I'll close the stream and just call it a day. And we just did that. Okay, so turn off. So that's my trade model. I didn't get the model or get the setup that I wanted. So I'm gonna just close the stream here for today. Thank you guys so much for watching. I'll do a trade recap. Probably I'll post it in the evening today. And